Hello, welcome to WINFXTRADING YouTube channel. If this is your first time of visiting the channel, do your best to turn on that subscription button. Make sure you turn on the bell notification. Try to like and share your comment so that YouTube will push you to a very high level of audience. Yeah, welcome once again. Today we discuss about why traders blow their account trading boom and crash indices. Why traders blow their account is very, very important because 80 to 90% of the traders will keep blowing their account trading this type of market, whereas that all you need is a simple idea. Just simple idea, you make consistent profit. I don't brag. All my students are doing well. I have a course called Boom and Crash Millionaire course. Inside this course, you will learn how to kill boom and crash. Like, you will see your portfolio appreciate every time. I will be like, wow, what is happening? What is really happening? What makes me succeed? It's simply because you passed through my course. There's not too much magic about it. All these public videos I upload on YouTube, they are not going to make you rich consistently. You need to buy the premium courses, okay? That's good. So we talk about lack of volatility levels, understanding, and that you need to have this understanding. Lack of volatility levels, understanding, use of indicators, lack of valid price action strategy, margin overloading, poor risk management. These things I've mentioned are the major reason why you keep blowing your account. Now, let me just open a chart for you, and I'm going to explain this thing one by one. Let's open cash 300. This is cash 300. Okay. Lack of volatility levels. Okay. Cash 300 is much more volatile than cash 500 and cash 1000. The reason is this: the lower the number a crash or boom indices carry, the higher the volatility. Okay, that's the secret. Okay, so we can say cash 500 is much more volatile than cash 1000. Okay, if you think what I said is wrong, put down your comment. I will give you feedback. But at least if you check cash 300, okay, just look out let's check it. This is 1 minute candle. It has about 5.7 pips. 1 minute candle. Let's check cash 500. Let's check cash 500 in 1 minute. 1 minute candle. This have about it's fun. Oh my god, 0.75 something. That is fucking shit. It's not making sense to me. Let's check as 1000. That's 0.75 something. And this 0. Oh, this one is 0.43. 1 minute. Now, what do you notice? You discover that crash 300 have the highest peak in a minute, followed by crash 500, and then crash 1000. What does it mean? See, you need to understand this. It has this, inside here. Okay, you see, crash 300 is greater than crash 500, Like we are talking about the volatility level, is greater than cash 1000. Same thing apply to their boom counterpart, okay? Yes. It is you should have this understanding, please. Okay? Very, very necessary. Boom 300 is greater, like in terms of volatility, is greater than boom 500. Oh my god, let me correct this. Boom 500 is greater than boom 1000. Okay? Good. Now let's go to use of indicators. Use of indicators. A lot of people want to use indicator to make entry, and most of you traders, you use M1, some use M5, some use M15. You use lower time frame. Most people use lower time frame to trade indicators. Whether you use high time frame, whether you use lower time frame, the truth is that indicator will blow your account in the long run. 70% of opportunity provided by indicators always blow your account. Let me show you why. Simple. Indicators are lagging. They are lagging mathematical, technical, analytical tools on trading. What I mean, they are lagging. Imagine, take for instance, this is the moving average now. This is moving averages. This black one is 200, and the blue one, the green one is 20. They're all exponential moving average. Okay, most people, for instance, you are going to be trading the crossing when it cross, when the small period cross from below, you buy. Okay, now let me show you why this is lagging. Sometimes you will see profit using indicator. In the long run, that profit you got in the short run, it will blow. Like, you will not see it again. It become a loss. Take for instance, you want to be buying when the indicator cross from above, isn't it? Take for instance here, it cross here, then you buy here. Imagine you buy here, market starts spiking. That is a very serious setback. Just ask yourself this question: since you have been using indicator, why are you keep blowing your account? That is, the indicators are lagging. So this market, you bought here, but the market has already bought since. It has been buying all the way from here up, and you want to buy now. Because you saw this crossing, not knowing that opportunity is going to be a losing opportunity. See, spike. Okay, I don't actually have a absolute like objection or opposition to people that use indicator. Actually, if you're a wise trader, you will see indicator as something that might be like as a way to seize like multi opportunity. Then it left for you to use price action to filter those opportunities to know the truth. But because of what indicator has done in the past in my trading life, I decided not to use them again. I became angry. Then that's why I have, if at all I'm going to be maybe using indicator to spot opportunity, I will spot it in one chart and go to the main chart and do my price action to get confirmation. You can't use indicator to validate entry. Sorry. they're all going to blow your account. Take for instance, this level, this is level 9, 10. You are going to be buying cash 1000. If you are an indicator trader, you understand what I mean. But let me tell you the truth. If you don't know anything about price action, if you don't know fact about this market, you see, this level is going to be broken in the long run. Yes, it bought here, you will buy. But the truth is that there is high probability that you see this candle, very, very high. This candle. You see this candle? This candle might turn around to become a spike like this. And when you buy here, you are going to be losing. You are going to be losing by this amount. Check. That is 12 pip. So if you sold bought one loss, you are going to be losing by basically $13 plus. You see? You see how indicator has misled you? What the price is doing in the higher time frame or as a price action trader is different from what indicator is going to be telling you. So now let me show you, let me confirm this for you. I like the way they did it so that you people will understand me. You see this? It's very funny. You see this? It's very funny. You see this level, this place you are seeing. Here, there was a time this place, in the least zone level, there was a time that place hit here. But for the fact that the indicator will always lie or lag, the main price action start taking place, and then the indicator have to go up. It have to shift up, become like a hanging canopy. See what happened here? This is funny. A lot of people bought here. They bought here based on what indicator is showing them. They bought here. A lot of people bought here. Okay? When they buy here, it just buy for, let's say, 2 minutes, and most people don't put stop loss. Even if you put stop loss, once the spike happen, they don't care about the stop loss. They go beyond the stop loss, still give you big losses. Okay, so you should stop using indicator. The next reason why people blow their account is lack of valid price action strategy. Yes, there's this property of BoomCrash that if it is trending, no matter how you try to reverse it, yes, there is this behavior of traders. The traders have this mindset that if a market has been trending for a long time, then it will reverse, and then they try to use indicator, try to use some other price action to reverse the market. But the unfortunate thing is that when you reverse it, it will reverse in the short run. In the long run, you will still blow your account. That is not trading. Blowing your account, you are not trading yet. Okay? So when you have a good price action strategy, you are going to go far and not stop using indicator. It's a valid price action strategy. You are going to go far. Then the next thing is margin overloading. When you saw, like, take for instance, you saw a sell opportunity here, you open the first position. Let's say you use some plus size, you open the first position, then it starts going in your favor, you open the second, you open the third. Now, without knowing that, you should take account of your margin, that if the market is going to be against you for some time, your margin will be affected and you will receive a margin call. And when you receive the margin call, you now see the market go in your favor. That is painful. Okay, try to always control your margin. Don't overload your margin. How do you do that? You actually need to know your equity. Then when you see your equity, then ask yourself what is the minimum lot size you are going to be opening. And then when you know the minimum lot size you are going to be opening, then try to know your total margin. Then keep overloading, it's not overloading, keep adding position. How you know the strength of your margin is when you are losing, when your market is losing. So keep loading until you see some level of losses. In the case of crash market or bull market, try to trade the direction. Load try to trade the spike. So when you are trading the spike and you are loading, you are adding position, you see your margin will be falling because the market is not ready to spike yet. So don't use more than 50% of your margin. That's what I'm saying, so that you can have more space, have more margin to keep your trade until the profit time come, until you start profiting. Okay, it's very, very necessary. Okay, so the next thing is poor risk management. People blow their account because they have poor risk management. It's not all signal that you should just believe and say you are going to use some position, open some position. No, there are some signals that are weak. In that case, you can just open one position. There are some signals that are strong. Then you can open up to, like, you can use 50% of your margin because the signal is strong. You see, these are elements of risk management. Some people don't know how to put stop loss and how to put take profit. You see, or a profiting trade will turn to loss. These are poor risk management. Some people use big loss sizes or small loss sizes when they are supposed to do the opposite. Where you're supposed to use some big loss size, you use small loss size. Where you're supposed to use some small loss size, you use big loss size. And those contribute to account blowing. That poor risk management. I'm going to be ending this video. If you really want to change your life overnight, this is not bragging. All my students are doing well. I don't brag. If you want to actually trade market like pro, if you want to get this signal, you see this signal that bring the price down here. If you need it, how much pip? That was around all the way over 200 pips. If you want such signal, enroll for my Boom and Crash Millionaire course. There's no two words about it. We know how to trade all this. We know how to teach you everything you need to know. Okay. So I don't use indicator. Remember, I'm not supposed to be doing this here. Please, I hate indicator from beginning to see what you are going to be. Your chart should look like this. Place. Your chart should look like this. Place. That's how it should look like this. Okay. So that's how chart is going to look. You see, when you sell here, it's selling. That's what we teach you in the Boom and Crash Millionaire course. Okay, thanks and bye for now.